Ladies and gentlemen, good day and welcome to Cadila Healthcare Limited Q3 FY22 post-results conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh Nayak, Executive Director at Cadila Healthcare Limited. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen. Welcome to our post-results teleconference for the quarter ended December 31st, 2021. I do wish that you and your families are keeping safe and well. For today's call, we have with us Dr. Sharvil Patel, Managing Director, Mr. Nitin Parekh, Chief Financial Officer, Mr. Vishal Gaur, Senior Vice President, Corporate Finance, and Alok Garg, Senior Vice President from the Managing Director's Office. I'm sure you would have gone through the quarterly results investors presentation, which we have posted on our website and filed with the stock exchanges. The quarter gone by was yet another quarter of robust performance for our human health formulations business in India. The branded generics portfolio delivered a strong double-digit growth during the quarter. In fact, this is the fourth consecutive quarter of strong growth for our branded formulations business in India. With the reduced need of COVID-related medicines in India during the quarter, COVID-related opportunistic portfolio recorded a decline in the revenues during the quarter, both on a sequential and on a year-on-year basis. The consumer wellness business maintained its leadership positions in 5 out of the 7 brands in their respective categories. Overall, the India geography, which contributed 41% to the consolidated revenues during the quarter, posted a growth of 12% on a year-on-year basis, excluding sales of COVID-related products, generics portfolio, and divested products. Contribution of the India geography in consolidated revenues has gone up to 41.8% during the April-December 2021 period from 37% during the April-December 2020 period. With that, let me quickly run you through the financial numbers for the quarter gone by. During the quarter, we posted a consolidated revenue of 36.55 billion rupees, up 1% year-on-year. Excluding the COVID-related revenues, growth was 5% on a year-on-year basis. Consolidated EBITDA for the quarter was 7.5 billion rupees, and the EBITDA margins were at 20.6% vis-a-vis 21.1% recorded during the corresponding quarter of the previous financial year. Despite reduction in the mesalamine revenue in the US and decline in the COVID-related revenues during the quarter, various cost optimization and efficiency enhancement initiatives helped us contain the EBITDA margin decline by only 50 basis points. Consolidated PAT for the quarter stood at 5 billion rupees with a flat growth on a year-on-year basis. This is after adjusting profits from discontinued operations in Q3 FY21. Now let me run you through the operating highlights for the third quarter of FY22 for each of our business lines. Starting with our human health business in the India geography, the human health formulations business recorded sales of 10.8 billion rupees during Q3 FY22. Excluding sales of COVID-related products, generics portfolio, and divested products, the branded business growth was 17% on a year-on-year basis. The growth was driven by volume expansion in the existing products and key new product launches made over the last 12 months and improved realizations. We gained market share in our core therapies of the anti-diabetic, cardiovascular, gynecology, and anti-infective therapeutic areas during the quarter on a year-on-year basis. During the quarter, Lipaglyn catapulted to amongst the top 100 brands and was ranked 92nd in the Indian pharma market. This is a jump of 183 ranks, that is from 275 to 92 during the current quarter. On the super specialty front, we continue to retain our leadership position in the nephrology segment. In the oncology space, we are the fastest growing company in India. Consumer wellness business posted revenues of 3.8 billion rupees with a growth of 2% during the quarter. Lower growth in sales is largely due to two reasons. Firstly, due to the high base during the previous year comparable period, which was accentuated by a slowdown in rural growth. Secondly, as we are implementing a continuous replenishment process internally as part of the integrated business planning tool, we have reduced inventory both internally as well as in the trade channels. This would help us operate with leaner inventory and better availability of fresh stocks with the consumers. To counter commodity inflation, the price hike taken in key brands towards the end of Q2 FY22 helped in protecting the gross margins during the quarter. Now, let me take you through the performance of our US formulations business. The US geography comprising of generics and specialty portfolio posted sales of 15 billion rupees during the quarter. The business managed a flat growth despite continued pricing pressure in the market and decline in sales of mesalamine products. We gained volumes in other existing and new products. We received 9 new product approvals, including 5 tentative approvals, and launched 3 new products during the quarter. New approvals and launches for the quarter included nelarabine injection, for which we are granted 180 days of exclusivity. This product was launched immediately upon approval. We filed 12 ANDAs during the quarter, and amongst them is a first drug device combination product on NCE-1 date. Apart from this, 2 products are single source products and 2 others are limited competition products. We intend to prioritize products where we plan to gain volumes and also maintain safety stock of products where we foresee some opportunities to open up in the market. At consolidated level, the emerging markets business posted sales of 2.9 billion rupees, down 1% on a year-on-year basis. Excluding the COVID-related portfolio, the business posted a growth of 7% during the quarter. Due to its presence in diverse geographies, the business managed to overcome challenges emerging out of political and economic uncertainty in some of its markets, as these were offset by strong growth in some other markets. As shared on previous occasions, we continue to work on various efficiency enhancement initiatives to improve operating margins. To reiterate, the zero-based budgeting approach will lead to margin improvement during the current calendar year. Advanced digital and analytics tools being implemented in manufacturing operations is likely to enhance compliance and efficiency through simplification. Both these initiatives put together are expected to improve our overall operating margins by 80 to 100 basis points. It was a priority that our employees feel safe and supported during COVID. In addition to implementing work from home, we provided teleconsultation and telemedicine facilities so that all our employees, irrespective of their location, could benefit. For employees attending office and at our manufacturing sites, strict protocols were followed for regular sanitization of the premises and limiting human-to-human interaction. We also provided special compensation to families of employees who unfortunately succumbed to the pandemic. I'm pleased to inform you that our group has been selected as the best pharma company to work for in the large company category for the year 2021 at the Employee Choice Awards by Ambition Box. Our CSR initiative at Dahod bagged the Gold Award at the CSR Times Award during the quarter. our Zydus Medical College and Hospital Dahod won the Gold Award in the Corporate Healthcare sector at the CSR Times Award. This was in recognition of the various initiatives and the healthcare support programs carried out in the rural area of Dahod. The criteria for the awards were impact, reach, and sustainability. The award saw participation from across industries and 138 corporates participated in this. This concludes the business review. I will now request Dr. Shavil Patel to take you through the progress and initiatives in our innovation program. Thank you.
Thank you, Dr. Nayak, and good evening, everyone. As you know, we post the receipt of our emergency use approval from the DCGI for our COVID-19 vaccine ZyCoV-D during the previous quarter. We have received an order from the Government of India to supply 1 crore doses of the vaccine. As informed by us yesterday, we have already started the supplies of the vaccine to the Government of India against their order. As you are also aware, we have entered into an agreement with Shilpa Medicare Limited for production and supply of drug substance of ZyCoV-D from their manufacturing facility. Supply of commercial batches of drug substance from their facility shall begin from the current month, which will help us improve our demand supply. I'm happy to inform that the Lancet has accepted a submission of interim analysis of the phase 3 clinical trial results for ZyCoV-D vaccine publication, with the largest clinical study done on Indian patients. On the global front, we entered into a manufacturing license and technology transfer agreement for the vaccine with Enzichem Life Sciences of South Korea. The partnership will lead to manufacture of over 80 million doses of the DNA vaccine in the year 2022. These doses will be supplied in South Korea and a number of countries in Latin America and Asia. We have also made good progress on the research and C front. We have initiated a global pivotal phase 2b/3 adaptive trial, which is the EPIC-3 trial of saroglitazar magnesium to evaluate its efficacy and safety in patients with primary biliary cholangitis, which is PBC, for the US market. The trial will be conducted on 192 subjects over a period of 52 weeks. The results of the phase 2A EPIC trial, which were published in the Journal of Hepatology, a strong peer-reviewed journal, has demonstrated that the molecule holds immense potential based on its safety and efficacy profile. Just to refresh your memory also, saroglitazar has also been given an orphan drug designation and a fast-track designation by the US FDA for the indication of PBC. From the month of October, we have also initiated enrollment for patients for the Evidence 10, another global pivotal phase 2b trial for saroglitazar magnesium to evaluate the efficacy and safety of the molecule in subjects with non-alcoholic steatohepatitis, which is NASH, and the fibrosis indication. So 2 clinical trials are underway in the US, one for NASH and one for PBC. Study of saroglitazar magnesium for PTMS, which is post-transplant metabolic syndrome in the US, reached the targeted number of patients, 15. We shall now be approaching the US FDA for a possible unmet medical need indication post the transplant NAFLD. We have also completed the study for saroglitazar magnesium with respect to hepatic impairment. We shall soon be submitting these results to the US FDA. Coming to other new molecules in our NC pipeline, we are extremely pleased that we were able to submit the new NDA, to the new drug application to the Drug Controller General of India for desidustat, which is an oral small molecule hypoxia-inducible factor prolyl hydrolase, which is the HIP-PH inhibitor for treatment of anemia in patients with chronic CKD, which is kidney disease, both on dialysis and not on dialysis. This molecule will further consolidate our leadership position in the Indian nephrology market. As per the study conducted by Lancet in 2020, 114 million people in India, another 132 million people in China, 38 million people in the United States, another 21 million in Japan, 41 million in Western Europe are estimated to be living with this chronic CKD illness. This underscores its strong global potential, and as you know, we have already partnered for this drug clinical trial in China as well. For our novel anti-malarial compound ZY19489, which is developed together with the Medicines for Malaria Venture, we have received an orphan drug designation from the US FDA during the quarter. This active drug, this is active against all clinical strains of Plasmodium falciparum and Plasmodium vivax, including all the drug-resistant strains. The phase 1 study of the molecule has demonstrated a long half-life and a potential for a single-dose cure for malaria. This molecule is a potential single-dose radical cure for malaria for the developing countries, where majority of the malaria cases and deaths are recorded. And we are very excited with the progress of this molecule, which has now entered phase 2. With respect to another molecule, ZYIL1, which is a novel oral NLRP3 inflammasome inhibitor, we have received a regulatory permission to initiate phase 2A clinical trials in patients with cryopyrin-associated periodic syndrome, which is CAPS, in Australia. CAPS is a rare, lifelong auto-inflammatory condition caused by the NLRP-activated mutation and is classified under the orphan diseases. This molecule has been found to be safe and well tolerated in our phase 1 trials, and as I said, will enter now the phase 2 clinical trial. On the biosimilars front, we have successfully completed phase 3 clinical trials for one monoclonal antibody and have received permission from the DCGI to initiate a clinical trial for one more monoclonal therapy in the field of cancer during the quarter. With respect to molecules in early stage of development, we have also submitted applications to the RCGM to conduct preclinical talks for one more biosimilar and biologics. On the novel biologics front, for our current lead NBE program, a humanized monoclonal antibody designed to downregulate the alternate complement pathway, we have completed a critical non-human primate PK/PD study and established the molecule as significantly good PK/PD and safety profile. With this, we shall be starting our animal tox study soon and potentially see this as an important molecule again in the orphan and rare diseases side. On the 505(b)(2) initiatives, as you know, in the month of October, our wholly owned subsidiary, Sentinel Therapeutics, and its licensing partner, Cyprium Therapeutics, announced positive results from an efficacy and safety analysis of data from 2 completed pivotal studies in patients with Menkes disease treated with our C2X101, a copper histinate product, making further progress towards the filing. An initial module of the NDA of C2X was filed with the US FDA during the quarter. This is a rolling submission, and we are likely to see an approval by end of this calendar year. Menkes is again an orphan drug indication. Coming to the pipeline of other 505(b)(2) products, we have received a clearance from the US FDA for one of our new IND applications, which was filed for pain management. The NDA for this product is expected to be filed by the end of the current financial year. We concluded a pre-NDA meeting with FDA for 2 more products in the area of metabolic disorder and also submitted a pre-NDA request for 1 more product in the orphan drug space. It is our endeavor that we continue to grow our existing base in India and other markets. We efficiently and add more new generic products and leverage a strong R&D infrastructure to create novel assets that will make us future ready. Thank you. And now we move over to the Q&A session.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we would request you to please limit your questions to 2 per participant. Time permitting, you may return to the queue for your follow-up questions. We will wait for a moment while the question queue assembles. The first question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
So thanks for the opportunity. Just on the vaccine front, the order with respect to the government of India, will that get completely manufactured in fourth quarter itself, or it will flow through in first quarter of FY23?
It will flow through in the first quarter as well.
Okay. And secondly, on this tie-up with Enzichem Life Sciences, so what are the steps here in terms of getting the regulatory approval from those countries and then subsequent commercial manufacturing? That is first. And how will the pricing play out?
Currently we are going to help them with the tech transfer of the technology. They already do have capabilities to produce recombinant DNA kind of products. So we will be transferring the technology once they have scaled up the technology, and they will be able to use our clinical phase 3 data from India and work with the Korean regulators for getting an approval is our current understanding. And they may be required to do some post-marketing data as well, or a bridging study. It's still a little early to say all of this, but the responsibility for moving the work ahead is from them.
But considering these milestones, still 80 million doses in 2022 looks visible, is it?
That is their current estimate that they have been able to give us.
Got it. All right. Thanks. That's it from me.
Thank you.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, thank you for taking my question. The first question is on the US business. The flat number quarter on quarter, is it fair to assume that this included, the seasonal uptick that we usually see because of flu in the US? And just on this one, if you could highlight what the base business erosion was, due to Asacol and without Asacol?
So 2 points. One is we have no seasonal business because this year the flu season has not been there in the US, and we didn't have any new business on Oseltamivir. So there is no seasonal business which was there earlier but not there this year. Also, with respect to the loss in share on mesalamine, it's on Lialda. Asacol is still without any competition in the US.
You had indicated some loss in volume in Asacol, so that's stabilized, right? You're not seeing any further...
Yes, that has now stabilized because this started almost in quarter 3 of last financial year. So.
Okay, and what was the base business erosion, sir? Then in that case, the price pressure that you've mentioned?
So I don't have it exactly right now, but the base price erosion is around a single digit right now. This is excluding Lialda. Lialda has had a higher erosion, but on the base business, it's low single digit.
Understood. And my second question is, I think you made an opening, in your opening remark, you made a comment about improving margins by about 80 to 100 basis points. I missed what would drive these improvements. If you could give some color on that, please.
So we have 3-4 initiatives every year, and these are part of the programs that we run. One is something for manufacturing, which is both on the supply side as well as on the manufacturing side, where we run a program known as Prism and Slim. We run a program, this year we had run a program for zero-based budgeting for our whole India end-to-end business, and we have seen a significant savings created out of that. We are also running productivity-based initiatives across the organization, and so 2 more programs on different quality parameters. So putting all of that together, we have been consistently delivering anywhere between 150 to 200 crores of savings. So that continues because the programs get extended and new programs are getting added.
Understood. Thank you so much.
Thank you. Next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, hi, good evening. Sir, a clarity on this vaccine. So is Shilpa, the drug substance that is manufacturing, is that being used for this supplying this 10 million vaccines to the government, or that's separate?
No, that is still not started. Shilpa is going to take their commercial batches this month, go through that audit and clear that audit. So their doses are still not available.
Okay. And you mentioned that this 10 million effectively will be supplied between the current quarter and the next quarter. So all 10 million will be done across these 2 quarters.
Yes.
And where are this bulk of this vaccine used by the government? Are they getting used for the 15 million?
government has given us allocated centers, and as and when the supplies start, and we are making sure that we have enough, as a person is vaccinated, we are protecting the second and third dose. So looking at all of that, there's a whole supply chain planning done with the government and the centers designated. So one by one, we are rolling out in all of these centers. These are all across India.
But this is for the adult vaccination. This is still not being used for 15 to 18 years group, adolescent?
So my current best estimate on this is that adult, obviously we are cleared. We have an approval from DCGI for children. Our NTAGI meeting has cleared, has finished for the 12 to 18 also. And I believe that once we start the supplies, we would be seeing an launch in that age group as well very soon.
Okay. And do you want to talk about your status of 2-dose vaccine? Is the trial over for that?
Sorry, status of?
2-dose vaccine.
Yeah, so the 2-dose vaccine enrollment is completed. Day 56 has also been completed. So we believe by end of this month, we will have all the data to file with the regulators.
And this is phase 3 trial which will be done for
yes,
this?
Phase 3 trial done from ages of 12 and above.
Okay. And just last question on the vaccine front is on this South Korean partner. Let's say all goes well and they start supplying as well. So would you get a royalty on the sales, which is like typically MNCs typically?
Yeah, we do have a profit share agreement with them.
And will that be standard, like what we've seen normally about high single digit or thereabout? Is that a standard number?
So I can't divulge overall, but I think it's a good profitable business model that has been agreed upon between the two partners.
Okay.
It will all depend on pricing, and depending on the pricing, you get to know that, right? So it's very difficult to answer that right now.
Sure. Just one clarity on the numbers. The personal cost, if I see it ex of wellness numbers, the personal cost declined 50 crore quarter-on-quarter. That's quite a substantial drop. So do we have lesser number of people here, or the provisioning was such that it resulted in one-off decline?
So in the last one year plus, we have been working on multiple initiatives on productivity improvement, whether it was India business starting with zero-based budgeting. Then our manufacturing side, we're running a program called WISE, which is again improving productivity. We have also rationalized our footprint in terms of manufacturing assets, and all of that is leading to reduction in people and reduction in cost as well. Beyond that, I think if Nitin Bhai or somebody would like to add anything.
Yes, sir. It's also because of our facilities of Nesar and Arcon, which are now not in operation. So that manpower cost is also reduction because of that.
And that resulted in no hit to the revenues. You could transfer everything, and that result in all cost saving.
Yes.
So there are very few people now. Other people have been retrenched. Obviously, there are no revenues also from those sites, and attendant costs are also not there.
Okay. Thank you, guys.
Thank you very much. Next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yes, for taking my question. Sir, on COVID vaccine, just wanted a clarity on pricing. So we have a pricing for government. For private hospital or private supplies, can you indicate any pricing you have in your mind?
So currently, I don't think we can give that. I think once we are able to get clearance to launch in the private market, we will immediately apprise you of the pricing. But suffice it to say that the pricing in the private market will definitely be higher than the current government pricing. But we still believe we will be more competitive than the current players.
Okay. And so initially, supply would be from your own manufacturing site, or Cipla would also be contributing from next quarter?
So it will be our own manufacturing site, and the other site is Shilpa, which will also start contributing.
Okay. And for a global market, getting it registered in different countries is the responsibility of your partner, or you need to have get approval?
Majority of the places where we are partnering, the responsibilities of the partner. We will obviously supply the data, the clinical data, and also the peer-reviewed journals data, which we said we already in the final stages of publishing in Lancet also this data. So if everything goes well, that data also will be supported.
Okay. Okay. And just the last one on desidustat, what's your progress? So we have submitted with the DCGI. Any timeline when we can see it coming to the market in India?
So we are estimating a launch in April this year. So it's a very imminently, we expect everything's on track. So we should see a launch in April. And this will definitely be one of the best launches in Zydus in the current year, I would say, in the current years.
Okay. So apart from this, any other meaningful product launched in India from biosimilar side, basically?
Yeah, so last year we had launched the Ujvira, which is Cadila. I would be happy to know that we have, I would say this quarter, we have crossed the number of prescriptions even by the nearest competitor, which is a brand, and it has been one of the very good launches. I think the next would be scaling up. It's not a new product, but with the enhanced indication for saroglitazar, the Lipaglyn and Bilipsa should see significant momentum in the current year. And then desidustat definitely will be a potentially large launch for this year. We also have some products where we are seeing patents of products going off patent. So we will be meeting the day one launches. We are also looking in an important launch in the iron area. Also one critical vaccine, which is varicella. So there are some important launches during the year. And those are some of the ones which I mentioned to you also.
Okay. Thanks a lot. I have more questions. I'll be in queue.
Thank you.
Thank you.
Thank you. Next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you very much, and good evening, everyone. Sharvil bhai, what's the visibility of Zycov-T vaccine, order from the government beyond 1 crore?
So current, our last discussion was the government wanted us to initiate the supply. Once we meet a steady base of supply, they did speak to us about further opportunities to add to the vaccine. We believe that this vaccine, there are still a significantly large population of people who in the 12 to 18 years who are not vaccinated. So that definitely is one opportunity. And the second is people are looking, we are already seeing booster doses and other applications beyond the single 2 doses that people may have taken. So those would be potential opportunities. So currently, those are the 3 opportunities that we are seeing. The government has spoken that once we comfortably resume our supplies, then we will talk about further discussions on further business. But currently, our order is limited to 1 crore.
Okay. And the fact that government has reduced their vaccine budget by 1/7 for next year from 35,000 crores to 5,000, if I'm not wrong, does that mean that, the opportunity size is shrinking significantly as you go into next fiscal?
I think to some extent, definitely there is uncertainty on what would be the opportunity size, and definitely it would be much lower than the earlier years because the majority of the population, at least in the adult side, is vaccinated. Having said so, at the capacities that we are talking about, which is about producing close to 1 crore doses a month, I think there is still sufficient opportunity to at least do we believe on the worst case scenario, 3 to 5 crore doses business. And that itself is still a significant amount of value and revenue for us. So assuming even a small 3 to 5 crore doses business is still very, very significant.
Okay. And Sharvil bhai, the order that you're supplying now, 1 crore, is it from your new scaled-up facility or the smaller one?
So the smaller is very little, and the scaled-up facility is just started.
Okay, so that's commissioned. You're supplying from there.
Already commissioned. Yeah.
Okay, excellent. And Sharvil bhai, question on the US business. What's your thought on Asacol HD competitor? when do you think, what's your best guess how the market can unfold over the next 3 or 4 quarters?
Did you ask about Asacol?
Yes.
Yeah. So our best estimate is, conservative estimate is that we see competition maybe in the July quarter onwards. There are 2 possibilities. One is we see an early preponement to April, which it seems unlikely, but is always possible. And there is also a scenario that we believe could happen where we could see nobody till end of the current calendar year.
Okay, that's very good to hear. And for Lialda, Sharvil, how much more room is there? What's causing this pressure? Is it the incumbents competing for market share? I don't think there was a new entrant there.
Yeah, so it is one incumbent who was competing for market share and they crashed the prices. So obviously we had to match.
Okay, one final on the US business. So keeping Asacol out, what's your outlook for fiscal 23?
So fiscal 23, I think our best estimate right now is assuming we believe we will be probably at par growth. So maybe just 1 or 2% or maybe less than 5% growth for the FY23. That's our current estimate. This is assuming that we don't see any one-time or big opportunities or one-time buys and all. And we have assumed a 6 to 7% price erosion to the base business. So, and assuming some competition later part of the year on Asacol.
Okay, and you have also included Revlimid upside on
this? Partial.
Okay. Thank you very much. That's all from me.
Revlimid, we are still not sure what will be the pricing. So depending on that, once we launch it, we can give better flavor on that.
Okay, Sharvil. Yeah, thank you so much. Yeah.
Thank you. Next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Good evening to all. My question is on gross margins. So how do we see this gross margin shaping up for the next 12-24 months? You have said that near term US is all flattish. India, we are on a high base of some of the COVID products. So how do we see the next 12 months? And in the past, you have said that end of fiscal 23, early fiscal 24, you expect complex injectables, etc. So if you could just help us understand the next 12-24 months, that would be great in terms of gross margins and EBITDA margin trajectory.
So I think on the gross margin side, we would continue to see some pressure in the US on price erosion, which we believe will get compensated by a better geographical mix driven out of India business and consumer wellness. As I said, the India business delivered a 17% growth in the last quarter, which is one of the highest, and we are still seeing a very strong double-digit growth in this current financial year, coming financial year also, irrespective of remdesivir. So I think that will definitely improve. We have also seen margin improvement on our India formulations business. So that will further aid to the GC. So I think the GC we will be able to, I think from this quarter 3 onwards, protect this, and we'll be in the similar range of around 62-63% gross contribution. Going forward, in FY24, we see a significant, we believe our estimates right now talk about a very big upscaling in the US generics business for us because of some high value launches that are planned for that. So, our aspiration is that we cross $1 billion in revenue in the next financial year in US, which is possible if everything goes well. And so that's what we are planning and working towards, which will then significantly see an improvement on margins also in the coming in the FY24.
That is very helpful. And secondly, on the R&D side, how should one think about it? I mean, your run rate was much higher in the past. It seems to have come down a bit on an absolute basis. So how do you expect, given that, a lot of trials happening in US, then you have biosimilar trials, which are kicked off. so various projects are ongoing. How do we see your R&D, either in percentage of sales or absolute, if you could guide for the next 2 years?
So with our estimates, we still believe that our current guideline of around 8% of revenue will be our R&D expenses, what we are still committing to. That's because many of these expenses that you see, we have already been incurring them. So we did a full phase 2 for 2 indications in the US in the current spend. We had done trials on biosimilars, and we continue to add more biosimilars. So I think we are looking at around an 8% average R&D spend to sales over the next 3 years.
Okay, perfect. And lastly, on the CapEx side, so what are the plans or what are our new CapEx plans? So we did, fairly well in terms of diversification. Post Moraiya, we had SEZ and a couple of others. So do they require to expand, or you are looking at new sites? What is the CapEx plan for the next 2 years?
So for the next 2 years, we have 2 areas that we are investing behind when it comes to CapEx. One is we are expanding our MR vaccine for WHO pre-qualification to supply to the WHO markets in 23-24, which will be a very large volume opportunity. We are expanding, also potentially expanding for our quadrivalent flu vaccine. We are the only Indian company and one of the 3 or 4 in the world who has the quadrivalent flu vaccine. So we are looking to see the expansion there. We will be having a new SEZ, new site for US formulation, which we are benchmarking to have currently the lowest benchmark cost that we are planning for across all our sites. So that will definitely come up over the next 2.5 years, and potentially one more additionally debottlenecking for our SEZ site. So those are the current plans for the capital investment.
Okay, perfect. Thank you and all the best.
Thank you. Next question is from the line of Keshav Mishra, retail investor. Please go ahead.
Yeah, thank you. So, sir, my question is for the Desidustat. Now that we are getting ready for launch, if you can give a flavor of the market size we'll be competing in India.
So I don't have the exact market size, but in terms of patient, we are almost targeting a 30-35% conversion of new patients and existing patients not on dialysis and dialysis. So which is a substantial conversion that we are building towards. We believe that this molecule has the potential to be a 250 crore plus franchise for the company over the next 3 years. So it is a significantly large opportunity.
Right. And sir, if a similar molecule in US, I think, got some observations from FDA. So are we looking to kind of do some kind of partnership and launch in some years maybe in US market as well? I understand we have a partnership in China. Are we looking for a similar partnership there?
So on Desidustat, our current thinking is that we have seen China and India definitely are one of the 2 largest markets. So that's definitely one of the potentials, and obviously which will allude to a lot of South Asian countries being covered. The second, in the US, we are looking at 1 or 2 new indications for this molecule, which are again unmet needs and orphan also. And as I said, our strategy has always been to look at rare and orphan diseases where we can build something. So that is something that is in current evaluation in the US in terms of clinical programs. We have already spoken about phase 1 for patients who are on chemotherapy and are anemic, and this drug is potentially a good effect there, and we have started a clinical trial on that in the US. So there are going to be, this is molecule something that we're evaluating for the US. More details, whether we can see an active program in more than 1 indication or so, I can only talk about it maybe in 2 quarters from now. But definitely we are looking at the developed markets also for Desidustat.
Okay. And sir, one last question on Moraiya plant. Now that we have physical inspection started, any timelines for re-evaluation by the FDA for audit?
So one point just to correct, foreign inspections have not started. The FDA has communicated in their publicly that they are not starting foreign inspections until February 8th, and that's when they'll give the latest update. So one is they have not started. If once they start, we believe that we could see an inspection happen for Moraiya, and originally we were expecting a Jan, Feb, March inspection. We still believe it is possible to happen in Feb or March, but again, it's still a little too early to say, but we are prepared for it and we are awaiting, and FDA has acknowledged that they will plan for an audit once the opening happens. When that would happen is still unknown and we cannot predict that.
Okay. Thank you, sir. And that's it from my side.
Thank you. Next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yes. One question, the gross margin this quarter, if I exclude the wellness contribution, because wellness gross margins have been weak, but excluding Zydus Wellness, the gross margin seems to have declined 180 basis point quarter on quarter. Just trying to understand, is that weakness largely coming from any particular geographies, or this was largely driven by raw material mix? What were the dominant factors? Because it's a very steep decline.
Yes.
I think Vishal can answer. My immediate answer would be because of US.
It's largely because of US business.
And that is because of methylamine Lialda reduction.
Some cost inflation, but largely because of US business price erosion.
But just trying to understand, our sales are flattish. Lialda is not that profitable for us anymore, right? It's not like we are earning margins equal to Concall over there. So it's a very steep decline, almost 180 basis points on the total business. So
one point I would like to correct before they add. One is Lialda is definitely not as profitable as Concall, but definitely very profitable. So I think while the second point of what you say is right, that it's not as profitable as Concall, but it's still very profitable. So that is when you see an impact on that. That is one of the impacts. And overall, there have been pricing challenges in the US and commodity inflation that has happened. So that's led to the gross margin fall. If I have missed anything, maybe Vishal or Nitin Parekh can add something.
No, that's all.
Okay. Second question is on the vaccine front. How are you thinking about the export market? If you want to export at a certain point of time, do you need an approval from WHO, or do you need approval from some central agency to export, or you can, whenever you feel that your capacity is now fully ramped up and the government India allows, I think there's no more control on export now. When can we see Zycov you starting to export out?
So still there is control on export. You have to take permission from the government export, what quantities and how much and when. The second part is for currently the scale that we produce at, which we are hoping to achieve, is 1 crore per month over a period of next 3-4 months. I don't think that that would be sufficient enough that we'll be able to export a lot. There will be enough sufficient only for India right now. Having said so, if we have the opportunity to export today, we have already requests from many countries where they would not require a WHO pre-qualification, and an Indian approval will be enough. But we are obviously not going to export. That will be complete our obligations in India and potentially the private market of India.
Okay.
And Anubhav, just one point of clarification, excluding Zydus Wellness numbers, on Q-on-Q basis, the reduction in gross margin is only 0.5%.
Oh, no, sir. Excluding, Nitin bhai, I exclude the other operating income. So I was excluding other operating income and then talking about gross margin difference.
Yeah, we do that.
So we have those data. We can furnish the data to you. So it was 64.2% in September quarter, and now it is 63.7% in December quarter. So it's 0.5% reduction after we exclude Zydus Wellness numbers.
And we also don't include other operating.
Yes, I'll get in touch. Somehow, second quarter my sheet shows 65.5%. So I'll get in touch with you guys. Thank you.
Okay.
Thank you. Next question is from the line of Vishal Manchanda, please, from Nirmal Bang. Please go ahead.
Thanks for the opportunity. Could you share an update on biosimilar filings and approvals in emerging markets?
So on the biosimilar side, we are looking forward. As I said, we did get approvals in Russia for PEG GCSF, and we have started supplies for that. Our critical big approval we are expecting very soon is in Latin America for at least one and maybe two molecules in this next 3 months. So once that happens, we can participate in large Latin American market government contracts as well as institutional contracts. And that will be significant in terms of our expansion in the emerging markets. Besides that, we have a partnership in South Asia for 1 or 2 biosimilars of ours. We are also seeing that post-approval in one of the Latin America, Colombia will activate, and we can see approvals coming through in Colombia, which will again add to the business that we're trying to build for. So those are the immediate plans on the emerging markets front, where we can see at least 4 biosimilars coming for approval in different markets. In India, we are still on a good track record. We believe now that we are the largest company by revenue on biologics in India and specific to biosimilars. So, and I think that traction will continue with more filings and more launches coming up.
How many biosimilars would we have in India as of now?
We have 12.
12. And do we have enough capacities to execute launches in emerging markets?
Yes, currently for the next 2 years to maybe up to 3, we have enough capacity. As we see scale up happening, we may need to add more capacity for FY26 and FY25 and beyond.
Okay. And can we see an acceleration in emerging market growth on approval of these biosimilars?
Definitely, our current business plan for export relies on some of these approvals, which we have started to see, and once we see that, we can definitely see immediately starting from a very low base to starting a $30-40 million revenue business.
Okay. And just one final one on vaccine. So WHO pre-qualification. Can you give some color on what it takes to get that WHO pre-qualification?
So from our perspective, I think the phase 3 trial, once it's reported and published, that's one part of the exercise which will be done, and we said we have published with a large number of patient population. The second is our new facility will need to go through some capacity and production and continuous production and show some history of number of batches made and all of that, both in drug substance and drug product. Once we are comfortable in doing so, then we will go ahead for WHO pre-qualification.
The entire process can take 2 to 3 years.
No, WHO, I mean, at least in the vaccine side, we believe it is possible to do it in 6 months.
The phase 3 trials and the
phase 3 trials are completed.
Are already done.
Yeah. Okay. They have already been submitted for publication in Lancet.
Okay. Thank you. That's all from me, sir.
Thank you.
Thank you. Next question is a follow-up from Ranveer Singh from Sunidhi Securities. Please go ahead.
Thanks for the follow-up. Just on biosimilar, the 12 biosimilars currently we have in India. So what would be the contribution of biosimilars in Indian business?
So currently, it's, I think annualized is about 600 crores, if I'm not wrong. Vishal?
So annualized will be roughly, all put together will be about 350 crore, 350-400 crore.
Sorry, it is 650 crores, you say? Hello? Hello?
It seems you lost the line for Dr. Sharvil Patel. I request you all to please stay connected while we reconnect him. Sir, in the meanwhile, would you like to take the question while we reconnect him?
Yeah. So, am I audible now? Everybody?
Dr. Patel is now reconnected. So you may proceed.
Hello. Hello.
Yeah, hello.
Yeah, I think I got disconnected. I assume you had asked for what is the revenue on biosimilars in India. It's about 600 crores right now, annualized.
And what would be the export revenue of biosimilars?
I don't have that, but it's not very substantial right now because we just started off in a few countries. But I don't have it offhand with me, but it's not substantial.
Okay. And secondly, on malarial products, so we had orphan drug designation. So what process remains to get it rolled out, and when we can expect?
So as I said, it's a very good opportunity. It's a single dose, so one pill, and we have seen very good data currently in phase 1. So it will go through the phase 2, phase 3 trial now. If we see equally good data in phase 2, then this program will definitely move into the phase 3. And move forward. And because we believe this targets the resistant strains of malaria, falciparum, and vivax and others, I think it will be a tremendously good opportunity. So I think all we can say right now is it looks very promising. But as we get more clinical data completed, which the trials will be very fast because they are only single dose trials. So once we have that data, we can share more in terms of the progress of the molecule.
Okay, so being an orphan drug, can we expect it getting the trials to completed in next 2 years?
Yes, and I think it is an opportunity for a tropical disease voucher also in the US. So we are evaluating all options.
Okay, fine. And of that 505(b)(2) pipeline, so we have some progress on one product.
19867303334.
Yes, on the 505(b)(2) you are asking. Hello?
Yeah, see, you lost the line for the participants, sir. So we'll move on to our next question, which is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, thanks for taking my question. Sir, there's a few questions on this saroglitazar. So if you can just elaborate on what kind of traction you are seeing in India. I mean, I think you mentioned 250 crore or so as the kind of expectations you have, but with now expanded indications, what kind of expectation you have on that product? And also on the export market, any thoughts there?
You're talking about saroglitazar?
Yes. Sir.
Yeah. So let me give you an overall perspective on Saro. Saro, we have launched in India under 2 indications, one for dyslipidemia and one for NAFLD and NASH. The molecules are tracking very well right now, and as I said, the opportunity is very, very big. It's a new market where diagnosis and other things are important. We have started a very large venture on FibroScan usage across all centers to be able to diagnose this effectively. So we believe that this is definitely will be in the top 5 molecules of the organization, this and desidustat. And both of these combined definitely have the potential to be upwards of 500 plus 600 crores in revenue over the next 3 to 4 years. So significant opportunity is there. With respect to the developed markets, I think from our current estimates, we believe for PBC, we would file by calendar year 24 and potentially see a launch in early 25. That is what we are building towards. We are also interestingly working to make sure that our label claim is very good. So beyond the current label claims that are available or people are looking at, which is obviously improvement in PBC parameters, we are also looking to see how do we improve for people who have gone through organ transplant and see how it is affecting them, people who have been cirrhotic and how it is affecting them in subpopulations. And if we see all of that data and if we get that good quality data, this is potentially a treatment that could be best in class in PBC. So that's what we're aiming for. And as I said, the trials have started, which is an adaptive phase 2b/3 trial. On NASH, the trials have also started on phase 2b, and again we will be looking at fibrosis score improvement from which is an important marker beyond just NASH score improvement. So those are the critical areas that have been looked at for Saro. Saro has also got an orphan designation in Europe also now. So I think potentially we are building towards a launch for calendar year 25 for Saro in US in PBC, and a 27 end the launch for NASH potentially in the US.
And sir, actually, I was also looking for other markets, other emerging markets. Any potential there you see for this molecule?
There is a lot of potential, but I think we are going to focus currently on US and post that Europe, and then we will look at other countries.
Okay. And so this extra additional label that you mentioned about a better label on PBC, how much of an advantage it gives you over other drugs? And I mean, in terms of timeline, I understand there are a couple of drugs under development. How are you in terms of timeline? When do you expect this particular molecule to come vis-a-vis the other competing ones?
So we believe currently there is no treatment. We believe we could potentially be on a conservative side the third to come to market, or potentially the second. So between the second and third in the market for this indication. The indication and label is all, I mean, everything depends on that. If we see an enhanced label, you can, from our best estimate, we can almost double our estimate. So it's a question of the potential and opportunity size to get the differentiated label with a higher barrier to overcome if we are successful. The potential is that it would become one of the key molecules to drive the PBC program. So that's what it is. But until we have that data or can confirm that, it's still very early to say that.
Okay. And so just on desidustat on China, what is the timeline there?
So the trials have started in China, so that's the good part. And I think we believe that the trials can also be wrapped up in the next 15 months.
Okay. So an approval in next 2 years is possible, you think?
Yes.
Okay. And sir, final one question, just clarification. You mentioned about $30 to $40 million biosimilar business. This is based on the approvals in Latin America and other markets that you will get. So this you are expecting for next fiscal, or is it over a period of time you are indicating?
I think to be on the safe side, we think this can be in FY24.
FY24. Okay. Okay, sir. Thank you, sir.
Thank you.
Thank you. Next question is a follow-up from Tushar Manudhane from Motilal Oswal. Please go ahead.
This opportunity again. Just one clarification on this Revlimid. When this tentative to be converted to final, or what is the key milestone there?
Yeah, we are expecting this launch in this calendar year. But exact date we cannot give, but it'll come up very soon for launch.
Basically, there's nothing from the Cadila then pending to convert.
No, it is not being held up for any other reason. It is just the dated launch.
Understood. Thanks a lot for this.
Thank you.
Thank you very much. Next question is from the line of Kunal Dhamesha from MK Global. Please go ahead.
Thank you for the opportunity. So first one on the clarification that you mentioned, the growth for us for the next year could be less than 5%. So is it for the US market or for overall revenue?
For US.
Okay, sure. And
yeah, and others we are expecting a double-digit growth.
Okay, and that would be excluding the COVID-related product base, or
no, including the COVID. I mean, not including the vaccine, but including the 12 COVID.
Okay, sure. And secondly, we said that
So
we are
actually the growth would be more if we exclude COVID, because COVID had a higher base in this.
right. And we are not quantifying the COVID contribution in the first 9 months in India business.
So I think we almost the COVID portfolio was definitely significant in the last calendar year. And as I said, the best estimate we can definitely give you that with COVID high base also for the coming financial, we can see a strong double-digit growth.
Sure, that's great. And in US, we are aspiring to achieve 1 billion top line by FY24 with some high-value launches. So can you name a few? One I would believe would be Revlimid. But apart from that, if you can provide some color on what are the other high-value launches.
So we believe that in this year we would be able to overcome clear the Moraiya site also, and we have 2 high potential launches in the US in the coming year. So if both of those things all go well, we are talking about launching 40 plus ANDAs in the coming year, and then we can definitely see that we can aim for achieving a $1 billion revenue milestone for the US. Exact product I can't give you for competitive reasons.
Okay, sure. Thank you. That's it from my side.
Thank you. Next question is from the line of Samir Baisiwala from Morgan Stanley. Please go ahead.
Hi, thanks for the follow-up. I know it's getting late. Shalvi, just on products like Nelarabine, just wanted to hear your thoughts, and how should we think about it? It's a small product. I mean, are the rebates high in this? And how does the pricing, go down? So just if you can share your thoughts on this one. It's an exclusive product, therefore I'm asking.
Yeah, so I think it's the good part is it's an exclusive product with very limited competition. So it's it's not a very large opportunity in terms of market size, but in terms of where we are, it's definitely a double-digit $10+ million opportunity for us, which will continue till the exclusivity, and then obviously as competition comes, it will fall off. So that's, I would say, to do with Nelarabine.
So such products also will get competition beyond 180, you think, or?
Yeah, I mean, we are assuming. I mean, for us to assume would be right thing to do rather than assume there is no competition. But I'm assuming that there is competition. Obviously, with small volumes, these products do fall off.
Okay, that's fine. And Shalvi, one more, on Revlimid, let me try. I know it's not disclosed, but what could be your volume share to begin with? Just general qualitatively, is it like low single, mid single, high single digit? If you can just help, give any color would be very helpful.
I think after launch, I will give you all what we can, but currently it is not possible to do. The competitive landscape and also there are multiple factors related to it. So I think after launch, it will become much more clearer.
Okay, no, that's fine. Thank you so much.
Thank you. Next question is from Anubhav Sahu from MP Research. Please go ahead.
Hello. Hi. Thanks for the opportunity. I heard that on the biosimilar size, you mentioned that we have currently the revenue annualized size of around 600 CR for India. 2 quarters back, I remember that it was around 350 CR, and so in that context, looks like we have scaled up really quickly. Wanted to understand from you, what is the revenue size you're looking in the biosimilar portfolio in the coming year or maybe coming 2 years, both for India and other geographies?
So this year has been very good. Majority of the products have done exceedingly well and gained number one. Launch of Ujvira has been also significant, almost crossing 50 crore mark in the first year. So and still scaling up significantly. So we are seeing here molecules which are becoming 80 to 100 crores very fast. So that's the first part of it, and we continue to hold a good, strong market shares there. Our biosimilars general growth plans are, on a CAGR basis, we can still see a 40 to 50% growth continuing. And more importantly, I think in 2022 we may not have big launches now because we already have a couple of programs in clinic. But in again 23 we would and 24 we would see very big launches in the oncology space, which would significantly add to the revenue. So that's the current plan. Certainly, this business will definitely scale up and be one of the large 1,000+ crore businesses for us. Exactly when will it happen? I think best would be that if you give us a 3-year window, we would see this business doubling for sure.
Okay. That's quite helpful. And secondly, you mentioned for US milestone, you're looking at this $1 billion. That is for coming fiscal, right? Fiscal year 23?
FY24.
FY24. Okay. And which are those two high potential launches? Sorry, I missed that part.
Sorry?
You mentioned two high potential launches. I missed that part.
High potential molecules, but we can't name those molecules.
Okay. Sorry, it was not mentioned. Okay.
So I think if everything falls in order, we get through a good audit with Moraiya and clearance. We have our transdermal franchise launch. We have one critical launch. If everything goes well and we're able to do that, if everything works in well, we are closer to that billion and stretching for that.
Okay, that's great. And lastly, I mean, if you can just mention if you can share some views on your biosimilar launch on this antibody drug conjugate called trastuzumab. So
trastuzumab Emactin or Ujvira is our brand, has done extremely well in the first year of launch. By this quarter, Jan, Feb, March, we believe we would have crossed the number of patients. Majority of the number of patients who are diagnosed will be on treatment on Ujvira now, so we have even crossed the brand in our view. So this is potentially one of the very good launches where in the first year only we have crossed in terms of market share, in terms of number of patients ahead of the brand.
And currently this for India only, right?
This is only for India right now. This program has also been nominated for global development, and we do believe that in the next 3 months we would have a face-to-face with the FDA. If we see a good clinical development plan and agreeable with the FDA and EMA, then this program will immediately move into clinics for US.
Okay. That's quite helpful. Thanks a lot.
Thank you very much. As there are no further questions, I now hand the conference over to Mr. Ganesh Nayak for closing comments. Over to you, sir.
Thank you very much and look forward to interacting with you again in the month of May for the last quarter and the annual results. Thank you very much. Good night and have a nice weekend.
Thank you very much, members of management. Ladies and gentlemen, on behalf of Cadila Healthcare Limited, that concludes today's conference. Thank you all for joining us, and you may now disconnect your lines.